About a week ago now, UNH released their earnings, and over the course of the last 5 trading days, the stock has fallen by over 10%. So in this video, I want to dive into what exactly is going on with UNH, what they released during their earnings, and what I am paying attention to, because I think investors honestly are looking at the wrong things when it comes to this company. Let's start by looking at the big picture. UNH put up revenue of $113.2 billion. That was growth of 12% year over year. In terms of UNH's revenue, there are very little surprises. What these insurance companies tend to see is a big jump up in their first quarter because they've adjusted their premiums so their top line numbers increase, and then that growth is consistent over the course of the next 3 quarters. So here in the fourth quarter, I would expect them to grow their top line by again around 12%. For bottom line numbers, they put up $2.92 of EPS. Analysts were expecting around $2.81 of EPS, so this is a beat of about 4%. Honestly, both of these numbers were just slight beats compared to what analysts were expecting. What I think had the biggest negative effect on investors was their full year guidance. They raised guidance to $16.25 of EPS. Overall, I think investors already really had that priced into the stock and were actually anticipating a higher guide for 2025. And that's why we're seeing the stock draw down here by, again, around 10% over the course of the last few days. And that's where I think a lot of investors are getting it wrong because they're looking at 2025. And at the end of the day, we already know that 2025 numbers for UNH are going to be terrible. We've heard that from the company over and over again. We've heard that from other insurance companies, that across the board, the insurance healthcare space is suffering in 2025. The real focus for investors needs to be what is going on in 2026. And honestly, I think the company disappointed a little bit on their news around 2026 because the only statement, the only reference to 2026 that we got was this statement from the CEO. We remain focused on strengthening performance and positioning for durable and accelerating growth in 2026 and beyond. And our results this quarter reflect solid execution toward that goal. Despite this being a positive statement, I still feel like we could have gotten more around what exactly is going to happen in 2026. A lot of people are anticipating growth, but what type of growth are we going to see from this company? Their earnings this year have been incredibly bad, and ultimately, they could easily grow in 2026. They could put up $17 of EPS, and that would be growth in 2026. What investors really want to know is, are we going to see growth back to numbers that we were seeing in 2024 and even in 2023? Or are we just going to see some small growth based off a new baseline that is set in 2025 of this $16.25? My opinion is still that we are going to see a lot stronger numbers in 2026 that are going to be more comparable to what we saw in 2024. For reference, in this most recent quarter, the medical care ratio came in at 89.9. Again, this is a very high medical care ratio compared to where the business wants to be at. They want to be in that 80 to 85% medical care ratio. And what this ultimately does is it has a major effect on their net margins. We can see that in this quarter, their net margins came in at 2.1%. A year ago in the third quarter, they were putting up net margins of 6%. Almost 3 times the net margins that they saw in this quarter. And this major shift in net margins is being driven primarily by this change in medical care ratio. In the third quarter of last year, their medical care ratio was 85.2%. So this 4% difference is having a huge impact on the business's bottom line. If you were to assume that revenue just stays flat over the course of the next year into 2026, but margins improve to again around this 6% mark, that would be in earnings from operations of around 9.7, almost $9.8 billion, and EPS, or at least adjusted EPS, of around $8 per share. So this would be a major improvement year over year, again, if they are able to get back to this higher net margin. And that if around 2026 and what numbers the company is expected to put up is what's really caused this little sell off in UNH's stock price. Because right now, analysts and investors don't know what to project for earnings. They didn't get very good insight to what is really anticipated for the coming year. And this has been a trend over the course of the last 90 days. Because 90 days ago, their EPS target for 2026 from analysts was $19.73. It has since dropped all the way down to $17.69. And this has barely changed over the last 7 days as well. Again, as analysts just haven't gotten a clear picture on what to expect over the course of the next year. And because of this, the stock is a little bit range bound. What we can see is that analysts right now on the low end are projecting 2026 EPS to come in at $16.48. That would only be a 1% increase year over year. On the base case, they're expecting $17.69. And then on the high end, they're expecting $19.31. What we have seen is UNH trading at a forward P ratio between a 15 and a 22. If we kind of average that out to an 18, what we see is a price target anywhere between $300 per share and $350 per share. And right now, the stock is trading exactly in the middle of that range at about $330 per share right now. But honestly, you don't outperform the market by following what everyone else is thinking. Because if everyone else is thinking it, it's already been priced into the stock. You have to have your own expectations for where a company is going and what type of earnings they are putting up over the course of the next 1 to 2 years. And for me personally, around UNH, I have them on the low end putting up $19.15. So basically in line with analysts' high end expectations. And if they do that and they have a forward P ratio of an 18, that would be a stock price of around $345 per share. But again, that is my low expectation. For my base case, I have them putting up $21.50. At an 18 forward P ratio, that would be somewhere around $387 per share for the stock. And on the high end, which honestly, I think they could even outperform this, but I just like being conservative with my numbers. I mean, they could put up realistically $27 of EPS if they just revert everything that has happened in 2025 and they don't lose a lot of customers with increasing some of their premiums. But I like being a little bit more conservative. So I have $24.50 on the high end of my range. That would be 50% EPS growth year over year from their 2025 numbers. And an 18 PE ratio, that would be a stock price of around $441 per share. And I think a lot of the super investors that were buying during Q2 likely stayed buying in Q3, and they might even buy into Q4 with the dip that we are seeing here after earnings. But here in just about a week, we will get to see again if additional super investors loaded up on UNH shares. We saw major buys from David Tepper, as well as Michael Burry and Warren Buffett were also buying this stock. I think those three are going to be net buyers again in Q3, and we might even see them buying again in Q4. But of course, don't buy a company just because a super investor bought into it, and don't buy a company just because some random guy on YouTube talked about it either. This is the YouTube portfolio. I do own shares of UNH in this portfolio as well as a couple other portfolios, and right now the YouTube portfolio is sitting at a total value of just under $85,000. And I'm very bullish on the healthcare industry in 2026. I think there's going to be a big turnaround for a lot of these companies. UNH is my third largest position in this portfolio right now, has a market value of just over $7,800. I'm up almost 13%. I have 24 shares in the portfolio. I also hold shares of Novo Nordisk. I've been actively adding to this this position. I'm down almost 8% on it currently. But again, I think this company is going to have a huge turnaround in 2026. And then on top of that, I do hold a little bit more of a speculative play in the healthcare industry of Oscar Health. I have 225 shares with a market value of $3,800. This position I am up on around 22%. I find it very interesting, this weakness that we've seen in the market over the last few days, because we got very positive earnings from a lot of big tech companies that sent a lot of them higher. However, what we are seeing now is a little bit of a drawdown. And I think this is probably a healthy drawdown that we are seeing. There isn't any major news that is really causing this move down. I think if we see some major news actually come out, maybe interest rates actually holding for a longer period of time, or some trade war, additional things going on between the US and China, or US and Europe, or something like that, we could see further drawdowns. And I would be excited about that, because if we can get these stocks at even lower prices, I have some capital that I would love to deploy. But right now, prices to me are still kind of in that kind of healthy to high range. I think they need to come down probably another maybe 3 to 5% overall for us to see kind of a healthier range in the markets. We still have some of those names like Palantir and Tesla that, in my opinion, are a little bit on the frothier side of the market. So if we see those come down significantly, I mean, those ones would need to drop 10, maybe 15% to get back to a healthier range. I don't know if we will see that big of a move down, but I think this healthy little sell off that we are seeing is actually going to be good for the market heading into 2026. But of course, this is all just my opinion. Let me know your thoughts down below. Do you own shares of UNH? And what is your price target for 2026? And more specifically, where do you think their earnings are going to go in 2026? Let me know all of that down in the comment section. While you're down there, drop a like on the video and subscribe for more videos like this one. And as always, have a wonderful rest of your day.